Let me just start recording again. Okay, it's on again. And yeah, now I'm recording the right screen. So sorry. Okay, so we check the news. This will be the last trading day, not last trading day. Tomorrow will be the last trading day on this week because on Friday we're going to have an NFP. So on NFP, we won't be able to trade. But right now, we only care about this trade recap. And let's just take a look at what has happened yesterday. So switching to the 15-minute chart. When I sent you the markups, price was somewhere around this region here. So price has just recently mitigated the 4-hour zone. This was the last recent 4-hour zone that I showed you in the markups, right? Price has just swept liquidity into this 4-hour zone, mitigated more than 50% of the zone, as you can see, and created liquidity inside of this 4-hour zone. So when the time I sent you the markups, price was at this region, exactly at this region, created more liquidity inside of this demand zone, as you can see, double bottoms here, relatively double bottoms here, lining up down for this demand zone here, which was the extreme of the structure breaking movement to the upside. So when I sent you the markups, I just lined up a few scenarios for you that we can expect the break of this demand zone and the continuation to the downside, or we can expect the reversal on this demand zone and the pullback up to this supply zone or to this supply zone. So these were the plans for yesterday's session, right? So if this demand zone can give us confirmation on 15-minute chart, we'll be able to take longs up to the supply zone. After the top of this supply zone, we'll be able to take shorts, or after the top of this higher supply zone, we'll be able to take shorts again. This was the plan for yesterday. And of course, the break of this demand was the plan. And as I told you in the markup updates, if price goes below this demand zone, then it will be a break and we'll be able to look for short continuations. If price just simply wicks the liquidity and closes inside of this demand zone, then that will be a liquidity sweep and we'll be able to look for long reversals up to this supply zone. So these were the plans for yesterday. Actually, as you can see, the breaking scenarios happened. So the demand zone has been broken. Price has just swept the liquidity from below this demand zone with this candle. Let me just zoom in. So price has just swept the liquidity with this candle, as you can see. This candle swept all of the liquidity from below this demand zone, mitigated the demand zone below the liquidity, and reversed immediately and closed inside of this 4-hour demand. Then, this wasn't enough for the reversal. After this, price couldn't just simply reverse to the upside. It has attempted the break for the second time. This candle has attempted the break for the second time, and this time it has mitigated more than the 50% of this deeper area, as you can see. And then it closed inside of the 4-hour demand once again. Then it wasn't enough again. Price couldn't reverse to the upside, couldn't create any long reversal. Then it just attempted for the third time to break below this demand zone. And the body break has happened, as you can see. With this candle, with this third candle, the body break of this 4-hour demand zone has happened. And after this, price has just immediately reversed to the upside. And this was the bias decider movement. Because if this bias decider movement can break above, sorry, just a minute. Sorry. Okay, so if this bias decider movement can break above the last recent supply zone, which was actually this one on the 15-minute chart, this candle, then it will be a change of character to the upside and we'll be able to take longs after this supply zone. But if the last recent supply zone, either on the 15-minute or either on the 5-minute chart, can hold price and give us confirmation, that will mean that this low will be weak. Because if this low point after the liquidity sweep and after the demand tap, demand 50% mitigation, isn't strong enough to break above the last recent high point, then this will be weak. Because if it can break the last recent strong high point, this will be weak and this will be functioning as liquidity. So as you can see, price couldn't break above the last recent high point here, couldn't even reach the actual structural high at this region, and just actually broke below the last recent structural low point, broke below the weak low point, and broke below this demand zone. So the expectation movement has perfectly happened as we expected. But there was a problem that we entered in a trade right here on this supply zone. I will go to the 5-minute chart and refine it. We entered here on this supply zone, and it was actually a really good 10 criteria trade. So 10 criteria were there for us to execute a trade, which is really high. After this, after a 10 criteria trade, price just simply swept our entry opportunity and entry, swept all of us out from the trade and reversed to the downside to our expected direction. So let me just switch to the 5-minute chart. Okay, here was the break of the demand, right? The demand has been broken with clear inefficient movement, clear structural breaking movement, clear liquidity creation for this movement, etc., 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 etc. And price has mitigated our POI. Here was the 5-minute POI that has actually closed below this less recent demand zone, this 4-hour demand zone. This has started the less recent inefficient movement too. And yeah, this was the last recent valuable supply zone for us. Price has reacted on the supply zone, as you can see, and this was your entry opportunity right here when price changed character to the downside. I will break it down on the 1 minute chart. And after this, price will just simply swept us out from the trade here. Okay, we could say that there's one reason for this trade did not work, which is a technical reason, is that this was part of the liquidity. So relatively first tap, second tap. But I wouldn't really consider this as a first tap and second tap. I wouldn't really consider this as liquidity or a sell trap, because about this supply zone, there was no valuable supply zone can be found for us on the 5 minute chart. Because here, as you can see, here was the last recent demand zone that price has just simply mitigated with this movement, couldn't close below this movement, and price actually rejected here with these weeks. And this demand zone has been flipped from this area, from this 5 minute supply zone perfectly, as you can see with inefficient movement. So this is the right supply zone in this case, and everything about this supply zone, just another reason, has been formed in lunchtime area. So this had a chance to hold price, this did not have a chance to hold price, and this has been mitigated already. So if we say that this is liquidity and we've been swept out by a simple liquidity sweeping candle, there was no supply tap at this region. And I found the technical reason for the loss behind this trade. Of course, it could be the liquidity sweep right here. It could be simply the liquidity sweep for us, for the reason that swept us out from the trade. But I found the fundamental reason that actually Biden, I believe Biden did a speech at this time, and it was a war news speech. So, you know, war news can easily push price to actually really extreme volumes, and it can easily sweep you out from trades without any sign, because war news are just kicking in immediately. And this could have been a war news because Biden did a speech right here at this region, just perfectly right here at this region. So this could have been a war news, which wasn't expected, which we couldn't actually expect that it will happen, and we did not know about. So yeah, this could have been a reason, but the second reason could be just simply that there was liquidity. But let me just switch to the 1 minute chart and tell you and show you what has exactly happened here. So here was the 5 minute zone. As you can see, this is the 5 minute zone. Here was liquidity for this 5 minute zone. Price has just simply rejected on this demand zone after breaking below the 4-hour zone. If this demand zone, as I told you, could break above the last recent high point, then it would have been a change of character to the upside, and we could have looked for long opportunities, but this didn't happen. Instead of this, price had just simply reacted on this 5 minute supply zone and created a change of character to the downside, actually a perfect flip zone, because price was coming up after reacting on this demand zone, creating liquidity, more liquidity inside of this demand zone. So more liquidity for the upcoming shorts, liquidity to target for us, one more criteria. Then it came up to this supply, mitigated this supply, rejected strongly on this supply, created a change of character here, created a flip zone here. This was the candle that has started the inefficiency. As you can see, perfect inefficiency started in candle, perfect flip zone candle. And technically, right here at this region, when these 3 candles kicked in, as you can see, these are really high impact, really high volume candles. At the time these candles kicked in, Biden did a speech. So these candles could be caused by Biden's speech and not a technical reason, because if there are fundamental news, high impact news, we don't trade. But for war news, we can't really actually prepare ourselves, because war news are just happening suddenly without any expectation and without any further or earlier say. So yeah, these 3 huge candles has happened by Biden's speech, and we've been swept out from the trade. But as you can see, price has just reacted on the supply zone here, and I wouldn't consider this as liquidity. This isn't a liquidity for me. Technically, this isn't double taps. This isn't a trend line liquidity, because 2 touches won't be a really strong liquidity. So I wouldn't consider this as liquidity right here. I would just simply consider this as a loss of Biden's speech. And yeah, let me just break down the trade on the 1 minute chart also. So it was a 10 criteria trade, because price had just flipped a 4-hour demand zone and mitigated a 50-minute/5 minute supply zone after the flip. So it was a confirmational entry. Price created liquidity to take and liquidity to target, came back up to this supply zone, reversed strongly on this supply zone, created a flip zone, as I said several times, created a change of character, created liquidity to take right here for this supply zone. As you can see, first tap, second tap, double taps, liquidity to take for this supply. So it was a combined liquidation. And yeah, basically it was an inefficient movement too. Basically it was a V-shaped recovery. So it was a 10 criteria trade, which I will take without hesitation anytime if it appears on my screen. Without hesitation, I will take this trade. We couldn't expect that high impact news by Biden's speech. It has happened. We have to live with it because, yeah, it is what it is. It has been swept. It's swept out. It's swept out us from the trade, as you can see, and just continue the main movement to our direction where we expected price to go. And that's it, basically. It was a 10 criteria trade. Really nice trade. Really nice criteria. Really nice trend because it was a pro trend higher time frame 10. It aligned with the pro trend higher time frame 10 too. So yeah, I saw that loads of you guys took this trade, and I'd like to ask you how many of you guys took this trade. Just draw on my screen if you did or if you didn't. Yeah, most of you guys took this trade because it was a really nice opportunity. And that's it. I'm actually proud of you. I'm really proud of you because you guys took the exact same trade, and loads of you guys took the exact same trade, which means we have a systematic approach. We have a really nice, thank you. We have a really nice systematic approach and a really nice followable plan because we all took the same trade, right? Which means really see the same thing. And this is our plan. This is our edge, which we have to keep repeatedly execute. Because if you keep repeatedly executing this edge, we'll be profitable on the long run. Because as I said in yesterday's New York market update message, this trading plan model, so these 10 criteria has like 60 or 70% win rate. So these type of trades, when price lines up with the pro trend, trade lines up with the pro trend, has liquidity to take, liquidity to target, strong reaction, change of character, flip zone inefficiency, etc. So all of these 10 criteria are lined up for a trend, or sorry, for a trade. This type of entry model has 60 or 70% win rate. So it's a really strong trade model, entry model, which we'd like to take every single time if it appears on the screen, right? But sometimes we will take losses. Sometimes we will take a loss like this when everything goes well. It's a 10 plus 10, 10/10, A+++ setup, but it sweeps us out, right? It will happen. We will see lots of these scenarios in the future, but this will happen. We have to get used to these, and we have to live with these and look for new opportunities after these type of sweeps happen for us. But yeah, it was a really nice trade. There was a nice explanation from one of the guys technically yesterday. I didn't see that. And okay, let me just continue. So after this, I took another setup. As you can see, price has just mitigated the full of this demand zone. What am I doing? So mitigated full of this demand zone and swept the liquidity from inside of this demand zone. And actually, these candles didn't close below this demand zone on the 5-minute chart and the 15-minute chart. So these candles closed inside of this demand zone and started an immediate reversal. After sweeping this liquidity. But after this liquidity sweep, price wasn't been able to recover and to create another change of character to the upside to actually lead our direction to long and to give us a long entry opportunity. And instead of creating a change of character to the upside, it just actually flipped this zone with a perfect reaction, retracement, and flip. So this is a flip scenario, which has been started from this 5-minute supply zone. As you can see, I just marked this supply zone. Price has mitigated this supply, more than 50% of this supply. Thereafter mitigation, it has just created a V-shaped recovery, created a change of character to the downside, created liquidity to take right here. So here was actually, this could have been considered as a liquidity. First, second, this is liquidity for me. And this was a trap zone also because, you know, this zone was built up for the extreme zone because if the decisional do not have liquidity, this was the decisional. If the decisional do not have liquidity and do not have inefficiency, then the decisional will be the liquidity for the extreme area, right? So the extreme area had the inefficiency right here. The decisional did not have any liquidity or inefficiency, as you can see, because basically this decisional zone started this push to the downside, and this inefficiency right here has been filled up right away after the inefficiency has been created. So the only inefficiency could be found was right here on the extreme zone. So technically this could have been considered as liquidity, as a trap zone. As you can see, some of the guys, some of the traders opened here positions on this zone too. That's it basically. Liquidity has been formed for this zone tap has happened, 50% mitigation has happened for the extreme zone, and immediate push away has started. Then I did not set my stop loss to break even because it didn't break below the last recent low point. Didn't really. I did like the price action at this region. I did like the price action at this region, and I was really sure about this trade, and I didn't want to set my stop loss to break even because I would have been happy with the stop loss actually in this trade. So I just did want to let it run. And right here, I did not have a break-even trade. I just did let it run. And after this point, after the break of this low point, I did set my stop loss to break even. And actually, when I saw the break of this low point again, right here at this region, I did set my stop loss, I believe, to this region. So I just booked around 1-to-1 risk-reward ratio. So I just simply booked one risk-reward ratio on this trade because my stop loss was a bit bigger than the one on this picture. It was like 4 pips of the buffer because of the buffer and the other things. So yeah, at this region, it was a 1 risk-reward ratio trade. Trailing stop loss, it took me out when price just simply moved back to my trailing stop loss. And yeah, it was another great entry opportunity for us. I don't know if you guys took this entry opportunity or you didn't. I saw that some of you guys actually took this entry opportunity. Did you take it? So yeah, some of you guys actually took this entry opportunity. Most of you guys. Because it was another really nice entry opportunity with good criteria. Let me just count the criteria. Do you want me to track the criteria for each trade? Okay, I will just track. Please show the higher time frame tab in the second trade. It's here. Here was the zone that has flipped this. It was a 50-minute demand. Yeah, it was a 50-minute demand. This zone, let me just remove all of your drawings. So this zone flipped this actual 50-minute demand zone with inefficient movement, as you can see. And this was the 5-minute zone / 50-minute zone that price will just return to mitigate the 50% of this zone and reverse to the downside. So criteria tracking on the first trade. First, or let me just do it the way like this. So first, base criteria. So the first base criteria for this trade was the higher time frame tab, right? Higher time frame tab. Second criteria, liquidation. Liquidation has happened here, as you can see. It was another base criteria. It was a pro trend because it lined up with the actual pro trend on the 4-hour chart and the 15-minute chart, right? It was a pro trend. And I'm asking you guys, which one was the last base criteria for this trade? If you raise your hand, you can actually answer this question. Please, if you like to answer this question, just raise your hand. Which one was the last base criteria for this trade? I'm asking you. Don't use cheats. Joseph?
Change of character.
No, that's not a base criteria. Which one was the last base criteria for this trade? Nicholas? Not a flip. That's also guys.
It had inefficiency.
Inefficiency. Exactly. Thank you. Guys, did you learn the actual base plan and base criteria? Because you have to learn these criteria in order to actually trade, because you can just open this file. Actually, you can open this file anytime when you like to, but it's much easier when you don't want to focus on the actual plan and you just want to trade. You have to learn these criteria. So please learn these criteria. These are the 4 base criteria that has to happen in order to actually execute a trade. Without these 4 criteria, you can't execute a trade, right? These are the 4 base criteria that have to happen. So variable criteria. What could be the variable criteria? Let's just track the criteria. The first criteria that we had for this trade is, of course, the entry type, right? If we have an entry type, we have a variable criteria, which was a flip in this scenario. So flip was the first variable criteria because, of course, it could be a base criteria too, because without an entry type, you won't be able to actually enter in the market. But this will be still a variable because you won't be able to decide before the trade happens that it will be a flip, it will be a change of character, it will be a continuation. So you just simply take it as a variable criteria. So the first variable criteria was a flip. Second variable criteria, and of course the flip has happened here, right? So the second variable criteria was the V-shape, because here was the V-shape, mitigation and immediate V-shape recovery. V-shape. After the V-shape recovery, that was a liquidity target. Here was a liquidity target, right? We could target this liquidity with shorts. Perfect liquidity target. LTT. After this, we had the price wasn't coming from unmitigated zone. So this is one more criteria. No mitigation. After this, we had actually corrective pullback and the pro-trend phase, right? Because price was creating pro-trend main movements with strong impulse movements. So as you can see, the shorts are much more impulsive and stronger than the corrective bull pullbacks, because just take a look at this. Take a look at this, that price is creating huge downside movements, corrective pullbacks, downside movements, corrective pullbacks, downside, downside. Downside movements are much more stronger than the upside movements, and it happens with much more inefficiency and impulse. So, strong pro. Okay. And actually, we had the last criteria, which was the combined liquidation, because we have the combined liquidation right here. Liquidity to take, right? So if we have liquidity to take for the higher time frame zone and liquidity to take for the lower time frame zone, which is actually the entry opportunity, this will be the combined liquidation. This is the first liquidation, which means one criteria, and this is the second liquidation, which means one more criteria. So two criteria at all. So counting these together, 4 criteria, 5, 6, 7, 8, 9, 10. 10 criteria trade and still a loss, right? And these criteria together combined has actually a 60-70% win rate. So these 10 criteria combined together, of course, in my understanding and according to my own data that I gathered, these criteria combined together have a 60 or 70% win rate. Let's just track the criteria on the second trade, and I will ask you guys to track the criteria for this trade, okay? Let me just, can you show up how you backtesting? There are loads of backtesting videos that you can learn from. No, 50% mitigation did not happen, actually. This wasn't a 50% mitigation. I get a question. Let me hear. What's your question? No, guys, this wasn't a 50% mitigation.
So hello, Marcel. Do you mind going to the to the 4-hour time frame for the first trade?
Yeah.
So just zoom in a bit. Okay. So when the first trade, where did it happen? So I wanted to ask for this zone here. So can one say that it will be better to set the, like a sell limit on the 50% mitigation of that zone?
Sorry, what's the question?
I'm saying, so is it okay to set a 50% mitigation on that zone?
This zone?
Yeah, at the week of that candlestick.
What do you mean a 50% mitigation? This is the refined 4-hour zone. This is the whole 4-hour zone. Here's a buy to sell candle, which has created a change of character here on the 4-hour chart. This is a 4-hour zone refined on the 15-minute chart.
Yeah, so I was asking, so on the week of that candlestick, is it okay to use that as your supply zone instead of using the candlestick before?
Yeah.
So instead of using this candlestick here,
this is a 50%. I mean, not 50%. This is a 50-minute refinement of the 4-hour zone. This is the whole 4-hour zone right here. I mean, this is the 4-hour zone. This is the refinement of that 4-hour zone.
Okay. All right.
Sorry, I have to continue because session will start soon, and I just have to do a top analysis. Okay, let's just finish this. So let's just track the criteria for this trade, guys. Let's just track the criteria together. What were the criteria for this trade? Base criteria. If you raise your hand, you can say criteria. Okay. Let's just start it, guys. Please come on, be active. Be here, speak, please. Come on. Alex.
So we have a higher time frame zone tab.
Exactly. Well,
Can I continue with more?
IFC.
Someone else?
yeah, IFC.
Inefficiency. Yeah.
Perfect. Continue, Alex, please.
50% zone mitigation.
Yeah.
Oh no, the base. So we have.
Yes.
We did not have liquidation, unfortunately, or maybe I did not see it.
We had. I just explained it. It was here, right?
Oh yeah, but I did not see it for the higher time frame zone.
Yeah, for the higher time frame, we didn't have liquidation, but you either have to have a higher time frame zone liquidation or just an entry liquidation. So the liquidation criteria is for this one or this one, but combined together, this one and this one will be two criteria. Will work two criteria.
Okay, then we have a change of character.
And what's the fourth and last pro trend? I mean, base criteria. Yeah, I just spoiled it.
So we have higher time frame, inefficiency.
Broad trend.
Exactly, pro trend. Come on, guys, just use your microphone if you like to. Variable criteria. What are the variable criteria for this trade? First one is the 50% mitigation.
Character.
Yeah. Next.
V-shape recovery.
Yes.
Price was not coming from unmitigated demand.
Exactly.
And
Next.
Liquidity to target.
Exactly.
50% mitigation this time.
Yeah, it was here. It's already there. Perfect. Next one. There's actually, let me just count. There's one more.
Corrective pullback.
Yeah. So just count the criteria. 4, 5, 6, 7, 8, 9, 10. 10 criteria again for this trade. And of course, there's a difference between these criteria and the first trade's criteria, because on these criteria, we had a 50% mitigation, but not a combined liquidation. On this trade, we had a combined liquidation, but not a 50% mitigation. Actually, both of these criteria, so I will just copy it and paste it here. And so these 10 criteria combined together basically equals the same. So this will be as strong as this one. But if I would say, I mean, if I had to choose, I would say that this is stronger with the combined liquidation. But of course, if you have a +1 criteria for the 11 criteria, which is the 50% mitigation. So if you have all of the 11 criteria for this trade, and you had a +1 50% mitigation, this will be the best criteria ever that could happen ever. So if I see this criteria, these criteria combined together, I'm just blindly taking the trade without any hesitation, without any thinking. I'm just simply pulling the trigger if I see these criteria combined together. And these are the best criteria combined together. But of course, if you don't have a 50% mitigation for this one, this trade model, this criteria model will have actually 60 or 70% win rate. And these criteria combined together has like a 60 or 50% win rate. So all of these criteria are really strong criteria, and you're going to have lots of success with these criteria combined together. Of course, next part is the psychology, which you have to deal with. But technically, these criteria are really, really strong, and I will recommend you to take these criteria whenever you see these on your screen. If you see these criteria on your screen, just simply execute a trade on the specific block that shows all of the criteria. That's the rule. If you see these, execute a trade without thinking, without hesitating. Just simply pull the trigger, press that limit order, press that market execute, and be in the trade, because these criteria, these have a really, really, really high win rate. And that's it. You will take losses. As you can see, I took a loss on these criteria. I took a break even or a 1 risk ratio or trading stop loss on these criteria. Of course, These will go into my statistics. These will actually shape my trading plan. These will actually shape my entry model, and I will be sharper because I will have more statistics about these type of entry types, right? And these type of criteria. So just keep simply repetitively executing your edge, these criteria or your own criteria, and you'll be fine on the long run. You'll be fine. But of course, to actually, sorry, let me just remove the drawings. To actually identify these criteria and to be able to trade these criteria, you have to spend lots of time with backtesting. You have to backtest each criteria type. You have to backtest each combined criteria. So you have to gather data about these type of criteria combined together. These 10 criteria. If you have like 50 or 100 trades of data about these criteria, you'll be able to actually make a statistics for yourself that these criteria combined together have like a 40% win rate for me. And 40% win rate is actually a pretty fucking good win rate. Even a 25% win rate is a good win rate. But if it has 60 or 70% win rate, that will be a legendary trade model. That will be a legendary working criteria combined together for you. I'm just recommending you to take these criteria and these criteria because in my understanding and in my statistics that I gathered about from in a form of a backtesting, in a form of a light trading, case studies, etc., 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 these criteria combined together. And of course, if there's a 50% mitigation, that's the best. These have the highest win rate that you could ever see. In the second trade, I put stop loss in break even after 1 minute demand reaction because so I watch it in the plan webinar. Can you say something about it? Chilling markets, do what you like to do. Do what you like to do. You thought that that would be a right choice. You did set your stop loss to break even. That's it. Be happy for it. You saw the trade. You took a break even. First trade, you said no opposite zone tap after you didn't consider as an opposite zone weak deal and two click feed before supply mitigation. First trade, no opposite zone tap. You mean this one? Yeah, could have been a demand zone, but this isn't a demand zone. For me, in a pro trend, a demand tap will only be valid if it's a higher time frame demand zone, because all over the place there will be demand zones. All over the place there will be demand zones, but it's a pro trend trade. And of course, you're going to have demand reactions over and over and over again, anywhere on the market, on the chart, right? But since you're trading pro trend, and short is a pro trend right here, if there's no higher time frame demand mitigation, then I won't count it as an opposite side demand mitigation, because on the 1 minute chart, you're going to have loads of demand taps, and these demand taps will functionate as the pullback phase of the market. But of course, you can count it as a demand mitigation criteria, but in a pro trend trade, I will only consider as a demand opposite side mitigation if it's a higher time frame, 5 minute or 15 minute demand mitigation. Is it possible to analyze another chart today like Nasdaq? I don't even know. No, okay, I'm just simply not answering. In higher time frame, it was a demand also, really? Yeah, you could say it's a buy to sell candle or sell to buy candle. Yeah, you could say it is. So if you like to say that, that's a -1 criteria. But let me just explain this. So if there's a pro trend, for example, trend is short, just like in this scenario, price is moving like this. This is the 15-minute/5 minute chart, right? Price is moving like this, and you're going to have supply mitigations all over the place. Supply mitigation, supply mitigation, supply mitigation. And of course, this is the pro trend on the 15-minute chart. So let's say this is the 15-minute chart. But let's just take a look at this leg, for example. So this leg is coming up like this on the 1 minute chart, coming up, forming demand zones over and over again, tapping into a supply zone, creating a change of character, giving you an entry opportunity. So here's the higher time frame supply zone. This one, right? This is the second supply zone. Price has just mitigated the supply zone, created a change of character after tapping into this supply zone. Here's a change of character on the downside. Simple change of character, strong change of character, doesn't matter because it's a pro trend trade. So a simple change of character is enough for you. You enter here on this character changing supply, right? So you're going to have demand mitigations all over the place, 1 minute demand mitigations all over the place. And these demand mitigations, for example, like this one will give you a pullback, a small retracement. This will give you a small retracement. This will give you a small retracement. But I only count the demand mitigation for a criteria. I mean, I only, I will only say that price is coming from an unmitigated zone when it mitigates a higher time frame demand zone, for example, like this one on the downside. So this is extreme zone. So if price mitigates this extreme demand area, let me just grab this, mitigates this extreme demand area before taking us into our entry point, then this will be a -1 criteria for me. This won't be a criteria for this zone because price is coming from unmitigated demand zone. But if price taps into these kind of a small retracement points, which is technically liquidity, which have been explained several times in the past videos and webinars, I won't count this as a criteria. I mean, yeah, I will just simply count this as a criteria because it's not a unmitigated zone tap for me. It's just a simple liquidity building movement. But this only counts for a pro trend trade. Okay, this is only valid in a pro trend trade. In a counter trend trade, any kind of mitigation will just simply take away criteria. So if it's a counter trade, if this scenario is simply a counter trade, any kind of mitigation, so 1 minute zone mitigation will be price is coming from an unmitigated zone. So that won't be a criteria for you. But in a pro trend trade, I only count the higher time frame zone mitigations because the lower time frame zone mitigations, so the 1 minute zone mitigations could easily be just a simple liquidity call action. But once again, it's my understanding. It's my understanding. This is how I see the market. This is how I just simply look at these zones. I just consider these zones as liquidity. You have to gather data about these kind of scenarios too. And if you gather data, you will see with your own eyes that actually these are liquidity collecting movements and not just a simple actual reversing movements. These are just simple liquidity collection movements and not a reversal point. And you will see it with your own eyes. But yeah, you could say there was a 5 minute demand tap also right here because it was a sell to buy candle. You could say that. And okay, I agree with it that then it's a -1 criteria for this trade, but it's still a 9 criteria trade, which is really, 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 really good. Okay, let me just grab a cup of water, just a minute. Okay, here I am. After higher, your left was perfect answer. Better to wait for counter than confirmation entry. Exactly. After unmitigated. Exactly. If you're trading in a counter trend, so if you're trading the counter trend and price mitigates any kind of an unmitigated opposite sided zone. So for example, let's just take a look at this. Let's say, okay, I just want to explain this, then after we will hop into the top down session. Let's say price is moving in an uptrend on a 15-minute chart, right? Sorry. So price is moving in an uptrend on a 15-minute chart. This is the 15-minute structure. It's bullish, creating series of higher highs, higher lows, higher highs, higher lows. Okay. Of course, we will have retracement points after some breakout structure on the higher time frame. So there's a breakout structure on the higher time frame on the 15-minute chart. I will just mark it as a 15-minute. So here's a breakout structure. After this breakout structure, we're going to have a retracement, right? So price is coming up. I'm just drawing the 1 minute structure. Price is coming up, creating actually this last recent high point, which was actually some sort of supply tap, which is a retracement point. So after this supply tap, price just simply reverses to the downside, right? So there will be a reversal to the downside. We need a strong change of character in order to execute a counter trend trade. So there's a strong change of character happens to the downside. If the strong change of character do not mitigate any kind of an opposite sided zone, so it doesn't mitigate this less recent demand zone, then it will be a safe to trade counter trend trade, and you'll be able to enter on this strong character changing zone. But for example, if price mitigates this demand zone, and this is a 1 minute liquidity collection demand zone, right? If it would have been a pro trend trade, but it's a counter trend trade, so this zone mitigation will actually invalidate this supply zone. Of course, you can still open a position on this supply zone if it fits in your criteria, if it's okay for you, but I don't recommend you to open a position on this supply zone if price mitigates an opposite sided zone. So for example, this demand zone, because this short will be the counter trend, right? This short is the counter trend, and this movement right here will look like this on the 50 minutes. So just a small pullback, and there's a high chance that simply this supply zone will be flipped like this, and price won't just react on this supply zone when it's coming from a demand zone. So I will recommend you to wait for another confirmation if price taps this zone. I mean, taps this supply zone. What am I doing? So taps this supply zone here. I will recommend you to wait for another confirmation. After that, you can enter in a trade, because if price mitigates any kind of an opposite sided zone, either if it's a 1 minute, either if it's a 5 minute or a 50 minute zone, then it will be actually riskier to open a counter trend trade. But as I said, once again, if it fits in your criteria, if this isn't a problem for you because you gathered enough data about it and you're sure that this trade will hit TP, and you just simply want to execute this kind of a trade when price is coming from an opposite sided zone, you can go for it. It's your own decision. But in my understanding, once again, according to my data I gathered, this is a bad trade, and this could be easily swapped out if price is reacting on any kind of opposite sided zone. This is for a counter trend. And for the previous example, for a pro trend trade, I would only count as a criteria, or I mean -1 criteria, if price mitigates a higher time frame unmitigated opposite sided zone, and not just a 1 minute. That's it. I added price comes from an opposite sided zone to brace criteria in my counter trend plan. Nice. That's what you have to do. That's why I said you have to form your own base plan. That's really nice. And also, I couldn't find valid supply even in seconds, so I canceled this allocate. Perfect. Okay, so let me just create a tab analysis. Oh my God, we are starting in 15 minutes. I mean, we are starting the session in 15 minutes. Okay, so let me just ask a question. Everything is understandable yet? Everything makes sense? Alrighty, thank you. So, just quick tab analysis on the 4-hour chart. I just see what has happened here. Okay, so the 4-hour chart is exactly the same. I just broke it down on Monday. As you remember, I just created a tab analysis on Monday in a form of a video markup. So I won't break it down in further details because basically everything is the same. The only difference is that this region, that price had just simply strong change character on the 4-hour chart here, right? So strong character changing movement has happened on the 4-hour chart. Basically, the zones will remain the same because I will use the 15-minute refinements here and here instead of the 4-hour zones, because there's no valid 4-hour zone. Inefficiency can be found here. Basically, the only inefficiency can be found here from starting from this candle, but I will just use the simple 15-minute refinement of this zone. Okay, so 4-hour is basically the same. 4-hour just swap the liquidity from over this supply zone and reverse the downside immediately, and reversing every single trend on every single time frame to bearish. So the 4-hour trend currently, 4-hour is bearish. The 15-minute trend is bearish too, because it just keeps breaking below demand zones over and over and over again. But we will see it on the 15-minute chart. And mainly if the 5-minute and the 1-minute turns into bearish, we'll be able to take short setups. That's our plan, right? So the 4-hour is extremely bearish. If you haven't seen Monday's video, please just check that video because I've explained everything at this price action region in that video. And yeah, price has just swapped the liquidity from above this supply zone and reversed to the downside immediately, creating a strong change of character movement here and here. Okay, switching to the 15-minute chart. What has happened since yesterday? Oh, sorry, I'm literally stupid. I'm literally stupid. I was in a replay mode. And none of you guys told me. Okay, I'm literally stupid. Never mind. The same has happened. The exact same has happened. Price has just created a strong character changing movement, and there's more liquidity on the downside that needed to be swapped. So price is just building liquidity to take. This is liquidity to take for the shorts, for the upcoming short. And technically, there will be a flip zone somewhere around here on the 15-minute chart at this week. And maybe price has just mitigated that zone. So yeah, we have to see the 15-minute chart. We are still waiting for 15-minute zone taps or 5-minute zone taps, 5-minute zone confirmations. I mean, supply zones. 5-minute supply zone confirmations, and short entries. That's our plan for today. That's our plan for the week because price is heavily bearish. So 15-minute chart. What can we see on the 15-minute chart? Here's this liquidity line, right? Price has just built up this liquidity line. And let me just remove all of the things from here because these are just annoying things. Okay. So here we were yesterday. Price just broke below this demand zone and actually printed the supply zone that has caused the break on the 15-minute chart. So there was a flip scenario. Price is coming down, mitigated this zone, coming up, creating a retracement point and flipping this demand zone. That has happened yesterday. And created this supply zone right here. Okay. This is the flipping supply zone. This is the supply zone that has flipped this demand zone down here. But above this supply zone, we have several other supply zones that could be valuable for us, right? Okay. What else can we see? I will actually just close these zones because we do not care about these zones until this zone is being tapped. So what other zones can we see? We can see another retracement point that here was a demand zone, right? Please stop drawing on my screen. So here was a demand zone. Price just reacted on this demand zone too. And after a demand reaction, it has just flipped this zone again starting from this supply zone. And this supply zone was the cause of the break of this last recent demand zone. And that's what I said. That's what I said, that in a pro trend, you're going to have retracement points. So if the pro trend is bearish, this is the pro trend, then you're going to have retracement points on demand zones. So right, supply zones will break over demand zones, and demand zones will give you retracement points up to supply zones. This is what's happening. Retracement point on a demand zone up to a supply zone, break. Retracement point on a demand zone up to a supply zone, break. Retracement point on a demand zone up to a supply zone, maybe it was a lower time frame supply zone right here, break. Retracement point here on this demand zone, on this extreme zone, up to a supply zone, and expectational break. This is how a pro trend works. Okay. So I will just delete this one. And yeah, price has just reacted on a low point. Price has just reacted on this low point. And technically this low point is the origin of this whole order flow to the upside that was leading to a sweep/break. We don't really know if it was a sweep or it was a break. We will have to see. Right now, our trend is still bearish. Right now, we only focus on short opportunities because that's what we see on the chart, right? Please, guys, stop drawing on my screen little red dots. Okay. So what can we see right here at this region? The price has just built up liquidity right here. Price built up this liquidity for the upper supply area. So below this flipping supply zone, we could find liquidity here at this region, right? Okay, what else can we see? The price has attempted to flip this supply zone and just closed above this supply zone a little bit with body closure, but I would call it as just a simple liquidity collection. I wouldn't call it as a break. So in my understanding, this isn't the break of the supply zone. This supply still holds. Okay, if this supply, let me just mark this demand zone out because this is the last recent demand zone. This is the last recent demand zone that has caused this break of structure to the upside. Here, as you can see, this demand zone caused the last recent efficient break of the structure because the trend has changed on this weak low point. So price was just reacting on this weak low point. And after a reaction on this weak low point, the trend has been changed to bullish on the 15-minute chart, right? So here's a change of character to the upside. But more likely, as I explained it several times earlier, is the pro trend now bullish? I wouldn't say that it's bullish now, just because I explained it several times that the purpose of this reversal in the middle of nowhere is to collect liquidity, is to collect more liquidity. And I believe either of this supply zone or this supply zone will give us a confirmation and the continuation to the downside. So currently the trend is bullish. Currently this trend is bullish, of course. Price is printing higher highs and higher lows on the 15-minute time frame, respecting demand zones over and over again, breaking structure to the upside over and over again. So currently the 15-minute chart is bullish, but price has just heavily reacted on this supply zone. And if this last recent demand zone will be broken, then I believe we will see the continuation of the bear trend. This is just another retracement point in a purpose of a liquidity collection. So let's just build a plan for the 15-minute chart. If price can break below this demand zone, so it, for example, creates a flip area, breaks below this zone, comes back up to the supply zone, then we'll be able to take shorts. Sorry, we'll be able to take shorts targeting this demand area down here, targeting this demand area. I mean, sorry, this demand area here. And if demand zone is being flipped, then we'll be able to take shorts to much deeper price action regions. For example, this another weak low point, because this is a weak low point too. This weak low point couldn't break above the last recent supply zone here at this region. So back to the plan. If this demand zone is being flipped, so if there will be a flip zone, we'll be able to take shorts down to the next recent 15-minute demand zone, because we always target these demand zones, right? If this demand zone is being flipped, we'll be able to take shorts to another deeper 15-minute demand region. But if this demand zone holds, if this demand zone holds, this last recent demand zone holds price and creates a change of character, which I don't believe it will create a change of character, and it will give us an entry opportunity. But if there will be a change of character on the 5-minute chart and a good entry opportunity, we'll be able to take longs after this liquidity region, right? So we'll be able to target this liquidity region as our long targets, simply because this is our main plan right now. I mean, not main plan, main trend. Longs is the main trend right now, according to the 15-minute chart. So on the 15-minute chart, 1-minute longs will be the main trend. But if price flips this zone, the main trend will be changed back to bearish, and we'll be able to take shorts down to this demand zone. If this demand zone is being flipped, then the overall higher time frame main trend will be flipped to bearish once again. So let's just take a look at the plans. That what can we expect? What are the possible scenarios for this session? So as I said, on the 15-minute chart, of course, as I said, if price creates a flip zone right here, breaks below this demand zone, then we'll be able to take shorts down to this demand. If this demand is being flipped, then we'll be able to take shorts down to some deeper price action regions. But if this demand holds price, so this extreme demand zone holds price and creates another change of character to the upside, it creates another change of character to the upside on the 1-minute chart, then we'll be able to take longs targeting this liquidity line up here. Why? Because if this demand zone breaks, this last recent demand zone breaks, it could be just simply a liquidity sweeping movement, because as you can see, here's perfect liquidity. And that's why I think that this demand zone won't be able to hold price, because this is just simply liquidity built up for the deeper price action region. So I believe this demand zone will be flipped. There will be short opportunities down to this demand zone, as this demand zone has a chance to hold price and give us a long opportunity targeting this liquidity line, but it also has a chance to be flipped. So we don't know yet what will happen on this demand zone. All we have to do is react. But let's just talk about this demand zone. As I said, this is heavily part of the liquidity, so there's no really high chance for the hold of this demand, and I can't really see a high chance that this demand zone will hold price and create a change of character entry opportunity here, targeting this supply zone or this liquidity line. I believe this demand zone will be broken and we'll be able to take shorts. But we have to consider the next scenario too, when this demand holds, creates a change of character entry to the upside with good entry criteria, and we'll be able to target this liquidity line with our longs. So these are the possible scenarios for this session. And I believe if price breaks below this demand zone, then it won't happen in this session. So mainly in this session, I will be aiming for the break of this demand zone. If it happens, I will be targeting this demand zone with my target point. If this demand zone holds, gives us an entry opportunity, I will be targeting this as the long target point. If this demand zone holds and gives a good entry opportunity, I will take a long right here, but this is the less probable scenario. I believe this won't happen. I believe this demand zone will be broken. I don't think it will hold price, or if it holds price and creates a change of character, that will be just a buy trap to sweep all of this liquidity. So yeah, that's what you can see on the 15-minute chart. We are just simply playing around zones. If this demand zone breaks right here, then the pro trend will be short. If this demand zone is being broken, the pro trend is short. If this demand zone holds, then the pro trend is long. If this demand zone holds, then I don't believe that we will need a strong change of character on this demand zone, because yeah, this could be just a simple liquidity sweeping movement. But if this demand zone breaks, then we'll be able to take a short continuation as a pro trend trade. Change of character has happened. Let me just switch to the 1-minute chart. Okay. That was just a small change of character. Switching back to the 5-minute chart. But no. Sorry, let me just go back to the 4-hour. technically, our main trend will still be bearish. Our main trend is still being bearish. Why? I mean, our higher time frame main trend. Simply because the 4 hour has just swept, I mean, just created liquidity and created a change of character on several places, creating a huge bearish pressure. And until this high point breaks, there won't be a change of character on the 4 hour chart. So the 4 hour is still extremely bearish. It's creating a bearish pressure. The 50-minute chart right here. So this is the 4 hour structure, right? This is a simple leg. This 50-minute structure has followed the bearish trend. So the bearish, I mean, the higher time frame was bearish and the lower time frame 50-minute was bearish through too. So taking these short opportunities were the strongest possible trades that you could ever take, right? Because the higher time frame 4 hour trend lines up with the 50-minute trend. So short. But in this case, the 50-minute has just changed. 4 hour is still bearish. The 4 hour is still bearish, but the 50-minute has changed to bullish. But if the 50-minute is being changed back to bearish, then the 4 hour trend will line up again with the 50-minute trend. So if the 50-minute changes by character to bearish, then the 4 hour trend will be short and the 50-minute trend will be short again, right? So if the change of character happens to the downside either on this zone or this zone, I mean, if this change of character happens to the downside, then it will be the least probable than this one, because if this zone will be flipped, then the overall trend will be bearish again. But okay, the trend on the 50-minute chart has changed to bullish with this movement, right? So technically taking longs at this region will be pro-trend trade, but not as strong as this one, as it has been explained in the plan building webinar and PDF, right? So I will be still looking for short opportunities because the short lines up with our main trend. If short opportunities will be given, those will be the strongest opportunities. And if this demand holds, for example, then we will have a chance to see the sweep of this liquidity and the top of this supply zone. But if this demand breaks, we'll be able to take shorts down to this demand region. If this demand holds, we'll be able to take longs up to this supply region, targeting this liquidity. So we can play around and in between these zones. But answering the question, the main trend on the higher time frame is bearish. Okay, 5-minute chart. What can we see on the 5-minute chart? The price is just reacting on this demand zone, and the session has started, so I have to be quick. So price is just reacting on this demand zone, building up huge liquidity, and below this liquidity, there's huge inefficiency. So that's why I believe that this inefficient gap and this liquidity will be swept and it will be filled. I'm expecting that this actual movement, if it creates a change of character to the upside, it will react on a supply zone. It will react on a supply zone, for example, on this one right here, which is actually, a lunchtime area. So for example, if price creates a change of character here on the 1-minute chart, then it will come up to this supply zone, react on this supply zone, and we'll be able to target this demand zone. So lots of opportunities and lots of scenarios are lining up for us on the 50-minute, on the 5-minute. Basically, we can predict what will happen. But we have to create a plan for each zone. We have to create a plan for each scenario. Why? Because anything can happen. This zone can easily be flipped. And the shorts can be easily taken. Just remember that you have to see a body closure of this 50-minute zone on the 50-minute candle. And if it can close below this line, this liquidity line, then it will be just a sweeping movement. And if it closes inside of this demand zone, it will be a sweeping movement, and you'll be able to take longs to the upside. If this supply zone is being tapped, just remember that if the sweep happens to the upside and closes inside of the supply, it will be just a sweep and not a break. If it closes above, that will be a break, and you'll be able to take continuation up to the supply zone. If this demand holds, just remember that this supply can give you a reaction to the downside because it just changed character to the downside. If this demand is being flipped and it's an actual break, not just a sweep, then remember that you can take confirmations on this supply zone down to this demand zone. If this demand zone holds price, you'll be able to take longs with confirmations targeting this liquidity line. So just play around zones. There are lots of scenarios lining up for us in this session that we can play around. Just play in between these zones, wait for reactions, wait for high confirmations, wait for high criteria trades. That's it. As you can see, price is just simply creating a change of character movement on this 50-minute demand zone. It has actually changed character here to the upside. Character change movement has happened from this demand zone, but this is part of the lunchtime area, so we won't be able to take longs on this demand zone because this is a lunchtime area. Yeah, I would recommend you to wait for the break of this demand zone or the sweep of this demand zone. If the sweep happens and the reversal happens, you'll be able to take longs up to the supply or to the liquid region. If the break of this demand happens with body closure, you'll be able to take shorts from this supply zone, or just simply wait for the mitigation of the supply zone and the confirmation on it. Just simply wait for a higher time frame zone tap and higher time frame confirmation that will line up with your trend. Because currently, price is just bouncing in between short and bearish, short and bullish scenarios, right? So it has to give us a clear sign, because currently this isn't clear. Currently this isn't clear. Intentions aren't clear for price. We can't really decide what price is like to do or what it will do. We have to wait for a clear confirmation on this zone, or this zone. These zones will give us a clear confirmations. And yeah, just simply play around these zones, simply wait for higher time frame temps, simply wait for liquidations, simply wait for any other criteria that's in your plan. And this session is actually open. Is it understandable, guys, that what you'd like to do, what you have to do, sorry? Was this session understandable? All clear? All right. Perfect. That is the end of this session. I will send you the market updates, guys. If anything relevant happens, then I will send you the updates. Yeah, that's it. Just remember for the scenarios. I just drew several scenarios for you. Remember what could happen on this zone. Remember what could happen on this zone. Remember what could happen on this zone, and just play around with the scenarios. Just simply remember for the scenarios. And someone raised their hand. It was Uva Uma. Please, what's your question?
My question is, like, making this thing simple, does it mean like before the New York session, you just have to look at the pro trends on the 15 minutes time frame?
What the question is exactly? That we have to look.
On what time frame will I look for the structure? Does it mean during the New